Okay, peeps, welcome back. So today we're going to be talking about our trades for the week of 9/17/2023 through the current date, which is the 23rd. Let's get it. So the first thing we want to bring up is how much we got paid in dividends for the week. So as you guys can see, we're here on M1 Finance. So the week started on the 17th. We ended up getting $321.41 from M1 Finance. So I'm going to go ahead and actually click on this this tab to bring us to the actual investments that we're involved in. So if I go over here to Robinhood, you guys can see that the portfolio does look a little bit different. The reason being is because we have added to some of these positions. So here's the dividend we got paid from OARC. We got $16.83 on this position for the month of September. Go back to the investing tab. We'll go over here to Tesla. These are the shares that we've held for a while. We've actually held these shares since looks like the 14th. It was a pretty good price, so we decided to go ahead and bulk buy on this. So you got 29.18 from TSLY. We're going to go back to the investing tab, click on Apply, which is actually pretty deeply discounted right now too. As you guys can see, our cost basis is pretty high above the price currently. So we got 298 on that one. Plus 367. Let's see, what was this? 367.42. And the next one would be Facebook or Meta. I guess we can't really call it Facebook anymore, can we? It's called Meta now, as in the metaverse. If you guys don't know what the metaverse is, I suggest you go look it up. It's going to be a big deal in the future. I can tell you that right now. So 113 plus 370.40. Coney has not paid us anything yet, as you guys can see. We thought that it was going to pay in September. It turns out it didn't, so we're expecting that payment in October. We do still think it's going to be 90 to 110% based on volatility, but we'll just have to wait and see. So this one is Google or GUI. So we managed to squeeze in one share before the X date, so we got paid a pretty small amount on this one. And I believe we did not get anything for AMZ or Infly yet. So, because we picked those ones up pretty late, we actually didn't really want to touch it until we started seeing the price pull back a little bit. Yeah, so nothing on either one of these yet. So we got M1. Give me a second. I'm going to have to switch in between these tabs because if I take too long in between this, it's going to kick me out of my platform. So go back down here. Now we're going to click over to Webull. So if we click on the dividends tabs here, you guys can see that we got paid on the 18th from these as well. We got some money from Apply, OARC, and NVIDIA. So 316. Plus 3053. And lastly from NVIDIA, 104.13. Okay, so just during this week alone, we got $509.64 in dividends. Again, I mean, the market's been really tanking pretty hard, but we've been telling you guys this since the start of September that there is a good chance that September is going to be pretty bearish. I mean, literally every September for like the last 6 years has always been a pullback in the markets. Doesn't matter if we're in a bull market or a bear market. It's always been the same. September's always been bearish. So we got a pretty good price on Clip here, but you guys can see like our swing trades have just been getting smashed. We got our initial buy down up here at 12. We did say we think it would pull back to around 10. We actually underestimated that. It pulled back further. Riot, that's pretty much the expected price range, $9 to $10. Nvidia has pulled back a lot. Again, the reason why our cross basis on these ones are pretty high is because we haven't been putting a lot of money in Webull lately. Kind of our goal with Webull is we have a mix of swing trades and dividend paying stocks because we're basically swing trading for capital gains here. But on the flip side, we have dividend paying stocks here. So if the markets are down, if our swing trades are out of the money, the dividends will offset some of that unrealized drawdown. If you guys understand what I'm saying, it kind of it's like a hedge against the drawdowns, the unrealized losses of the swing trades that we have, and plus it gives us extra income too. So yeah, as you guys can see, pretty much all our positions are getting pounded pretty badly. If we put money into any of these, we would reduce our cost basis pretty significantly, and that goes for basically all of our positions right now. So there's that. Now we're going to go ahead and get into the positions that we actually bought and sold. We went over our Excel spreadsheet pretty thoroughly. We have not had any sells this week. Again, okay, so this is the futures chart of the S&P 500. As you guys can see, the FOMC meeting was recently just came out. We did make a video about that after the fact, and as you guys can see, the market is pretty much just kind of did this huge dumpola here where it's going straight down. So we're hitting support here. Hopefully we'll get a bounce, but this basically the back end of September is the worst part of September. So September in general is bearish, but the back end, the second half of September, is always the worst part of September. So what we expect going forward is that October to December will be bullish. That's usually what happens throughout history. So let's get into the buys. So we got paid from Tesla, but we did not put any money back into Tesla. As you guys can see, our cost basis is still the same. We are in a pretty substantial drawdown right now, but I mean, again, Tesla has been getting hit pretty hard. If we take a look at Tesla, you guys have to understand about these synthetic covered calls. I mean, it's literally designed to replicate the price action of the underlying stocks. So you guys can see that Tesla has been getting smashed, in part because of forward guidance, but also in part because of simple seasonality. As I said, August, September, and sometimes the first half of October can typically tend to be pretty bearish. So you got Tesla down that amount, and then you have Tesla as well. So you guys can see it's like literally replicating the exact price action. We're basically back here at support on Tesla. So the MACD, the RSI are below the 0 and the 50, which is bearish. But if we get a golden cross and get a push back above those break-even levels on the RSI and the MACD, it could be pretty bullish. The only really bullish factor that I can see here is that, well, basically we pretty much have like I guess you would say like kind of a bullish divergence going on here. So you got the RSI moving up, but the price action's kind of moving down. So, or MACD, I mean, and RSI. What do I mean by bullish divergence? Well, basically, it's where the RSI and or the MACD is moving up, but the price action is moving down. That's typically a potential reversal signal, and we're sitting here at support. So why did we not buy more Tesla? Well, the reason being is because we wanted to take as you guys can see on our Tesla position, we really have a lot of shares here. So we have about 550 shares just in this platform alone. But what we wanted to do was since M1 is now offering other YieldMax funds, as you guys can see, aptly, you got ORC up here, and in Nvidia, we decided to put some or all of the dividends into this position. Nvidia had a pretty large pullback. Take a look at Nvidia on the charts. On the daily, you guys can see I did make a video previously as to why basically reasons to buy Tesla over Apple and Nvidia at the time is because Apple and Nvidia were at all-time highs and Tesla was going down. Now is a great time actually to buy Nvidia. As you guys can see here on support, if it bounced off this area like it did before, you're basically looking at a huge, potentially all the way up to a 20% gain. You guys can see that we got a pretty good price here. We got 21.86. It's not really perfect, but again, trading and investing is not a perfect science. There's always going to be some error. You're never going to perfectly time the top or the bottom. If you know anybody that's able to do that, let me know so I can find out what their secrets and strategies are. But anyways, we got 10 shares here of NVIDIA. That was one of our buys for the week. And we got, I believe, 10 shares of OARC at a pretty cheap price. Yeah, so we got OARC at 14.24. We thought that 14 was going to be around the lows, but clearly it wasn't. That's fine. And you got to remember, guys, the lower that this thing goes, the more shares you get to buy for less money. So, if you're buying NVIDIA all the way up here at the top at 24 bucks, you got to basically compare the prices. How much is it going to cost you to buy 100 shares of NVIDIA? It's going to cost you $2,400 at the top. And at the bottom, we'll say you got in at 21 bucks. It's only going to cost you 2,100. So you essentially got the same amount of shares and saved $300 in the process. And on top of that, the more shares that you let's say theoretically that as the price is going down, the dividend gets reduced. Okay. But then the price eventually goes back up and the dividend gets increased. Well, if you're buying shares on the way down, you're basically pretty much what you're looking to do is you're expecting once the price goes back up, you're going to get all your shares on the way down here and you're going to get all your income on the way back up. Okay. So you're basically front loading a potential dividend raise at some point in the future. That's kind of how we're seeing this. So we got 10 shares of OARC for pretty cheap. 13.21. If we go over here to the charts, you guys can basically see that the area that we're at now is pretty much support. We did break this flat support level here, but again, you guys can see we're in kind of this channel thing. So this thing could actually come all the way down to 12.60 and then bounce and head back up. But by buying at $14, we essentially saved ourselves about $3.50 a share. So buying 10 shares, we're saving about 35 bucks by buying on the dip. So we got 10 shares of that. And then we also picked up some Aptly. So we didn't get a perfect entry here, but pretty good. We got basically 1.5 shares. Another one that we're taking a look at buying soon is SVOL. And the reason why is because it had a pullback. Pull up the chart here real quick. We'll actually move over to the weekly. So you guys can see that it kind of, it's been sitting at 23.29 and it's kind of pulling back now. So this is like a resistance area. So what we would do is we would try to DCA down on this thing. And that is assuming that the VIX, as you can see, the VIX has gone up a little bit. That's assuming that the VIX continues to go up. So we're going to go back over to Robinhood. Basically what we've added recently was we added some shares of Clip out of our dividends in Robinhood because, as you guys know, Clip is about to pay on the 29th, or no, the X date's on the 29th and the payment date's on the 31st. So we wanted to pick some of those up. We basically bought some recently. Let's actually click on the show more tab so you guys can see. For Webull, the only purchase that we made was we basically bought just a bunch of shares of Clip out of our dividends because, again, the ex-dividend date's right around the corner. So you guys can see from the 17th to the 22nd, we've been buying Clip. Wait, hold on a sec. This is actually August. My bad. So the 19th to the 21st, we've been buying Clip. As we told you guys, we're basically, as much as we can, we try to look to front run the ex-dividend dates of these positions. So we bought some of that. We have not bought any shares of OARC. We're Tesla as of late. We did get paid a dividend from Aptly, but we did not buy any Aptly. We instead decided to buy, I believe, basically a bunch of Enfly. So yeah, nothing on Meta. Not sure if we bought any shares of Coinbase. I don't think we did. No, we haven't bought any this week. Although the Coinbase ETF is starting to look much more appealing at 1850, so we may end up picking up some shares of that this week. So we did buy, or no, we didn't buy GUI, my bad. So we got paid a dividend from that. So yeah, I think the only buys that we had this week was pretty much on AMZ and Enfley. As you guys can see, Enfley's been getting smashed pretty hard, so it's a great time to pick some up. Nope, my bad. So no Amazon. I mean, we have multiple different portfolios, so it's a little hard to keep track of all this. Okay, so as you guys can see, we have bought a pretty generous amount here on Enfley. We just kept buying the dip as the price went lower. You guys can see that here. Our current cost base is 1707. The price is 1662. We go to Enfley. You guys can see that this thing's pretty much just gone down. We don't really have any support and resistance to give you guys here, so pretty much just this $18 to $20 area. So because of this, what we want to do is we want to take a look at Netflix to get a general idea of what we're looking at here. So we kind of have some support and resistance zones and levels drawn out here. As you guys can see, it broke, or it looks like it had a close on the weekly below the support level, but that could be a fake out. Sometimes the market does that. But we're sitting on the EMA, so that's bullish. We're still technically not fully broken through the support level yet, so that's bullish. The MACD and the RSI have had a death cross, but it's still in the bull territory above the break-even levels. We're still above this support level in this macro trend line here. So based on the EMAs alone, as you guys can see before it's bounced off of it, it's possible it could bounce going forward. So what are we expecting for the rest of September? Well, this is an interesting one I haven't shown you guys before. So this is the S&P 500 stocks above the 50-day moving average. Basically, kind of more or less what we expect here is when the markets hit these tops up here, so basically when about 88 to 95% of the stocks in the S&P are above their 50-day moving average, we're expecting the markets to be shorted or to go down. And when roughly about, I would say probably 3-4% all the way up to 17-18% of the stocks in the S&P are above their 50-day moving average, that's when we expect the markets to start turning bullish. So basically, when the price action gets anywhere in between here, we're expecting a reversal, and we're going to keep DCAing down as this thing continues to move down further. We'll keep you guys up to date on this throughout some of our videos as to kind of what the overall market is telling us. We can also click on the NASDAQ one here too. As you guys can see, it's pretty much the same story. You got your support here between 17 to about 3%, and your resistance between 90 to about, let's say maybe 83%. So anyways, that's pretty much it for today. Our dividends, buys, and pretty much our strategy and what we expect going forward in September. So hope you all enjoyed this video. Please like, comment, and subscribe. We'll see y'all later. Peace.